Last but not least, we have the utility sector. This is our last pick, and then we can start to form our portfolio for this fiscal year. As you can see, EXC, Exelon, is the sector leading MVP. EIX is kind of second in line for performance. It's also part of the M score dividend portfolio. And then we have the sector leading performer, PEG. I don't think I'm going to look at Southern. And just it is technically second leading performer, but just these three I think is good enough for now. Want to take a look at these companies. So this is Exelon. I read through this just before starting the video, and it appears that they all do the exact same thing. The only difference is kind of where they are in the country. So Exelon is United States and Canada, headquartered in Chicago. So I imagine it's going to be near the Chicago Canadian border is where they primarily provide their services. Just natural gas and electricity, pretty straightforward. Edison, same thing. They are in Southern California, and again, it's mostly just generating electric power. Um, I do have to say though that this one does not say anything about nuclear or natural gas, just straight up electricity. So um, that may that may actually mean something. And then we have PEG, which is Public Service Enterprise Group. And these guys, again, electricity, natural gas, and they are headquartered in Newark, New Jersey. So I imagine that's where most of their customers are. It does say that they do have nuclear as well. So a tiny bit of difference, but for the most part, I think these guys are pretty much the same. Take a quick look at performance now. So it's the 5 year at 20, 1 year is negative, and the year to date is 13. I do know just going back through all of the sectors that utility sector, 100% of all these guys are both above their 50-day and 200-day moving average. So they are definitely on the upswing. And yeah, 20, 20, and 20 for Edison. Then PEG, actually 40, 40, and 40, which is crazy to think. Let's look at this again. 38.69, 38.24, 39.49. So yeah, I mean PEG is definitely performing much better. Take a look at some surface level numbers here. Um, Again, Edison and PEG have performed the best out of these three. Dividends are about the same. Edison is higher for sure, and we can see here Exelon has actually lost since July 2023, but both of these guys are way up, about the same actually. Even going back, um, what 10 years, we could see huge gains in all these guys. All right, the PE I think is important here because again, all three of these companies are doing the exact same thing. They are uh, performing roughly the same, with the exception of Exelon, and so the PE means a lot here. And so we see that PEG has the lower PE, which means that it's actually cheaper. And so I talked about that when I said that all the companies in the utility sector are above their 200-day and 50-day, which is a great signal, right? But it could also mean that at some point they're not going to stay above their 200-day, 50-day. That's just the way that the numbers work. At some point, they're going to either meet or fall below their 250-day moving average. And so PEG seems to be the better deal when looking at these numbers here. And we can see just on average that Exelon is way below where it has been over the last 5 years. All right, net profit. Exelon must be at a negative, which makes a lot of sense as to why they are losing in price performance. And then PEG, much better net profit. Again, all these companies pretty much doing the same thing. PEG is a bit different though. I want to go back and take a look at that. So yeah, they do the nuclear, natural gas, and electric, whereas Exelon does do electric and natural gas, but I don't see anything about nuclear. So maybe that makes a difference. Not sure. All right, return on assets. Again, that goes to PEG. Cash on hand, that goes to EIX, Exelon. No, I'm sorry, Edison. And the cash to debt is about the same for all these guys. Edison just has more cash. All right, Alpha goes to Exelon. Again, this is not current data. This is historical data. So it doesn't mean that the alpha is great now. It just means that it has been in the past. But all three of these guys have decent alpha. And same thing with the up move is about the same. I can argue that the down move is about the same. And even the beta is about, I mean, everything about these guys is pretty much the same. The 1 month return, again, this is historical data. That goes to Exelon. Something tells me that Exelon in years past has returned more than these guys on a monthly average basis, and now recently it's come way down because of some reason, probably losing money. All right, volatility goes to PEG. That's good to see. And then, of course, the score goes to Exelon, management score to Edison because of that cash on hand. So PEG, just surface level numbers here, definitely wins out in almost every category. But the biggest thing for me is the PE ratio. That's really nice because again, when the PE ratio is low like that, it means that you're getting a really good deal versus almost double, meaning that you're paying more for the same amount of profit, right? All right, let's take a look at their financials. This one is Exelon. There we go, back to 2020. All right, revenue growth, 33, 17, 19, 21, and 22. Obviously, something has changed about the business between 2020 and 2021. Maybe they sold off half their business or something like that. So I can say revenue growth is actually positive because from 2021 through current, they've actually continued to grow. And this is the great thing about utilities. Their prices and even their costs in a lot of ways are contracted through the government. So they know exactly how much money they're going to make on a year-to-year basis, and they always contract to increase their profits. That's kind of the way it works. Before the utility companies can raise the prices on customers, they have to ask the government, hey, can we raise prices? And the government is always going to allow them to make a profit, right? And so that means that the profits are going to continually grow. At least the revenue will continue to grow. The profit, however, has everything to do with business management. So let's see what happens here. Again, we're going to discount this 2020, but looking at 2021 through current, we see that the net profit has also continued to grow. Looks great. Looks great. Let's take a look now at Edison, and we see that revenue has grown. There was a drop in 2023, and currently it looks like they're going to meet or beat the 2023 numbers. Whether or not they meet the 2022, I don't know. That's really hard to tell. Take a look at the net profit, and again, we see drop off in 2022, huge rebound in 2023, and it looks like they are possibly on track to meet 2023, but it doesn't look guaranteed. So that gives me a bit of pause. Let's take a look now at public service. We do see that we have really great revenue growth. Currently, they're at 10. Last year, they were at 11. So hard to know whether or not they're going to meet or beat that. But, looking back at the previous 3 years, I have to imagine that they will. And then the net income looks like they had a huge problem in 2021 and then a huge rebound in 23. So not awesome, not awesome. And then currently, net profit is again hard to say if it's going to meet the 2023 number here. So my concern is just the lumpiness of some of the financials. Um, Exelon is more stable for sure, which is probably why it has been in the better performing portfolios, even though it's been towards the back end of those portfolios, meaning that the performance of this particular stock does not matter a whole lot into the overall performance of the portfolio. But it is stable. Probably price probably doesn't move around a lot because you have you know straightforward revenue and profit growth. Edison, 14, 17, 16. I can sort of kind of get with that, but and then the net income, um, there's some issues going on. Not sure what that is, and even though the revenue is on track to beat 2023, the net income is not. And so I'm trying to look and see what may have been the issue here. Looks like the operating expenses, which is payroll and those sorts of things. Yeah, selling and general administrative has gone way up compared to last year, but it's on track for previous years. So, not quite sure what's going on, but um, I do have to say, Exelon and PEG look the best to me. Um, what I will do is I will go through the previous earnings call for Exelon and PEG and make a decision from there. But either way, really excited to get this last piece of the puzzle put in so we can start selling some options to start some positions in these new companies.